Good morning. Today is May 29th, and there is exactly days, two more trading days left in May, and then it's June. And so this past weekend, actually this past Monday was Memorial Day, and just to give you an idea where we are. So, yeah, June's coming up. And a couple more days left. And what's going on today? Got up this morning to see the Dow is down 1%. Huh, interesting. We're going to take a look at the charts here in a minute. I guess a lot has happened since last week, but I haven't been keeping extremely close tabs on the news. But from what I gather, the Fed minutes came out and appear to be a little bit hawkish, and so the Fed is behind closed doors is concerned about sticky inflation and the fact that inflation hasn't come down. And boy, I need to write down the date of when they said it was going to be transitory, right? Because I mean we're going on. I think I saw somewhere. Don't quote me on the exact number, but we're going on like something like 30 something months in a row of inflation over 2%, which is their goal. And so everybody knows the price of everything has gone up considerably. And inflation, as I mentioned last week, I believe, is the number one concern amongst Americans when it comes to, the upcoming election, right? And the other thing is that we know that inflation has probably been worse than anybody's willing to admit. Right. So the thing, yeah, the market has rallied to all-time highs. However, as I've been mentioning repeatedly here, well, hang on, I've got to go to a weekly chart to even show you this. So basically, right here, the all-time high in the history of the world, right, at the beginning of 2022. Um, this line should be at like 48.18, right? So at 48.18, which was the all-time high, it takes inflation adjusted S&P needs to be at 5,300, actually over 5,300, in order to have the same purchasing power. And so, the market itself, just the S&P index, has basically, it's still basically flirting with all-time high, which is great, but inflation adjusted, it's gone absolutely nowhere since the prior peak. And does that matter? Yeah, I suppose it does. It's important. But anyway, this is the kind of stuff that the Fed is. See, they made a huge mistake, and they have to be aware of it. I mean, come on. They know what they're doing. They got all these PhD economists and all that. And so, the question is, did they really think that their pandemic response of creating trillions of dollars out of thin air was not going to result in inflation? Because all throughout history, we know watering down the money supply is what has always created inflation. And so, um, anyway, all that aside, they've really created a mess out of things. And so I was talking to a neighbor of mine yesterday about some of this economic stuff. We were actually talking about home prices, and I was telling him, all the different crazy things about how basically monetary policy is like kind of screwed up the housing market too. So add that one to the list of things that the Fed has sort of screwed up, besides letting the inflation genie out of the bottle. And way back in the old days, I remember, and I don't know who used this, whether it was in a book or someone famous or just somebody I knew made it up, but something about, the letting the inflation genie out of the bottle, it's hard to put back in, and they're finding that out now. And so they're pretending that they have everything under control, but the damage has already been done. So prices are not going to go back down to where they were, a few years back. Um, And the thing of it is that the housing prices now, that's a whole nother conversation we could get into, but partially I blame, it's like we learned nothing from the 2008 housing bubble, right? And I partially blame that on the Fed too, right? But anyway, the gist of it is that part of it is, see, the Fed didn't own any mortgage-backed securities prior to 2008, and so the problem goes back a little bit further. But what's the Fed doing with billions of dollars of mortgage-backed securities on their books? That's another conversation for another time. But the fact that home prices have gone up and up and up so much, and I sort of blame Airbnb in a way for turning every spare bedroom into a hotel room theoretically. And so now what you got is, young people that own 15 homes that are Airbnbs, and they expect that everybody's going to constantly be on vacation. So I think between the overcapacity in hotels and Airbnbs, that's a huge problem. And then of course you have the financialization of single family homes, right? I mean, all these, BlackRock and all these investment firms owned single family homes, and that contributed to the problem. And so, we've learned nothing from 2008, and there's going to be hell to pay someday, because once that snowball starts rolling downhill, this is why the financial system almost collapsed in 2008, is because once property values start declining, then the math doesn't work on anything, right? So, and so they've created yet another mega housing bubble in theory, and hey, is it a stock market bubble? Yeah, probably. It's a everything bubble, and so, um, when's the last time we had a recession? It used to be the economic cycles were kind of a law of physics. And so you'd have economic cycles, and so now the whole thing is that the Fed, and obviously the politicians, but the Fed, they just absolutely, are doing everything they can to avoid having any sort of a recession ever. But it's pretty much inevitable. Like, no matter what they do, inevitably something is going to come along, and it's just part of the laws of nature of the business cycle. And so by creating this bubble to avoid a recession, they're just going to make it worse down the road. But anyway, the old saying, while the music's playing, you got to dance or whatever. So, um, objectively speaking, right? When you look at the market up here, right off at the all-time highs, what's interesting about where we are right now is, as you remember, like a couple weeks back, I drew that sort of horizontal level there, which was the prior all-time high before we took that little dip. And here we are retesting it, right? Which is pretty healthy. And interestingly enough, I mean, if you look at this pattern here, you've got 2, 4, 6, 8. We're on about 10 days of basically sideways consolidation, sort of price action, and quite frankly, I mean, it looks to me like. See, here's the thing. Whenever I see these outside reversal bars, or bearish engulfing candles, whatever you want to call them, outside reversal bar, bearish engulfing candle, however you want to call it, I prefer the bar charts. Anyway, I always think to myself, well, geez, that's too easy. I mean, it's too easy for the market to go down. But I'm telling you that, you know, technical analysis, generally stay, and especially ones that are at highs like that after a run up. When you see one of those, so here's the other thing about that I've noticed, and is that when you get one of those, the market doesn't immediately just tank, right? It's what it likes to do is it likes to pop back up and have, a couple or a few inside days to sort of throw everybody off, but not exceed the high. And so, anyway, I'm going to show you even a better example of that. But right there, that's a huge warning sign, yellow flag caution sign, and I would expect I would expect that it's going to be, and I could totally be wrong because I mean the market's going to do what it's going to do, but I would expect that there's going to be a period of time that goes by before this high is exceeded, right? And this is not even the example that that I'm thinking about here. So right here, you had kind of the high, and then this particular day, you had this humongous outside reversal day, bearish engulfing candle that didn't actually occur at the high. But when you see one of those, I mean, look what transpired. We got, the first dip of the year, basically. I mean, I don't really see anything else. I suppose that doesn't really qualify as a dip. So, but anyway, pay attention to the high of, I guess that was Thursday. Pay attention to that high. Now let's see if we can go back in time. I'm just going to do it this way because, oh, there we go. Right there. Look at that. That's actually the one I was looking for. Let me see if I can, there you go. That's the one I was looking for right there. So look at that. That was last summer, right? July, towards the end of July. But that was basically the same thing. It was an outside reversal bar after a big run up, and was it the all-time high? It wasn't the all-time high. It wasn't at the all-time high, obviously, but I mean in context, look at where it was. You had a big run up, and then it was obviously a multi-month high, but the point of it is that I remember seeing that and thinking to myself, well, that's it, stick a fork in it. I'm going to get rid of that. I remember thinking, stick a fork in it. The current rally is over. And then the next few days, like the next day, the market gaps up, fairly significantly. And everybody's thinking, oh, yeah, well, we're just going to go right back to the highs and all that. That was kind of a fake out. But so anyway, it's kind of insidious because that's like, the big red flag that pops up, and then anybody that thinks immediately that the rally's over, they get punished because, for a couple of days there it looked like it was just going to keep on going, like that day was going to be ignored. But lo and behold, it didn't get ignored, right? Lo and behold, that turned out to be a significant turning point there, outside reversal. And so, from 4,600 down here to 4,100, that was the correction of the year last year. So anyways, fast forward to today, fast forward to right now, and we're in sort of a similar situation here with, and so hey, I'm not saying just because we got this outside reversal, and it wasn't really a huge, like, sort of mega down day like it was last July. But anyway, it is what it is. And so until, I hate to draw anything else in this chart, but until the high from, I guess it was last Thursday. So let's see, Thursday, Friday, Tuesday, Wednesday. Yeah, these holidays always foul me up. um, so until that high is exceeded, it's potentially a time to be a little bit cautious, right? So what I wanted to do was, and there's a couple other things here. Here's what I wanted to do. I wanted to show you the rest of my chart, which has tricky. Tricky. Let's see if I can do this here. Oh, there we go. All right, so there you go. I'm a pretty big fan. I'm actually a pretty big fan of the MACD, but I like the histogram so much that I don't even need the lines. It's just like the MACD histogram is one of my favorite indicators, amongst others. I mean, I have different indicators for different things, and I like to look at all the indicators, and I like to keep my charts clean, as you see. I see some people that, they got RSI, MACD, stochastics, and 1,000 levels and lines and all this on their charts, and I have a bunch of those indicators on separate charts, and I like my charts to be clean and not give me a whole bunch of bias, but I do pay attention to these indicators. Anyway, my point here is, not to belabor it, is that this MACD is, headed for the zero line. and you can see that we had this little correction here that we just talked about, and sort of the MACD had already gone negative, and there's a method to interpreting this. I mean, sometimes like during this uptrend here, the fact that it was kind of going negative and positive, I mean, that wasn't really a big deal, and sometimes it's flat. But when you actually get these readings that get, say, 20 or more, then it becomes a little bit more useful. But long story short, that outside reversal bar we saw, here, we got the little sort of dip which peaked, and then we got the W pattern, which I talked about last week, and so market rallied back up, but now this MACD is kind of rounded out, and we're seeing a little bit of a sideways consolidation at the same time that the moving average convergence divergence, which if I had the moving averages on here, you'd see that they spread out and then they converge, which tells you that basically the rally's running out of steam. That was a lot of words to say that the MACD is displaying the fact that this rally that started at the beginning of the May is running out of steam. And so that doesn't necessarily mean that the market's going to roll over, because like right over here, back in this area in December, the MACD market was rallying, it ran out of steam, went below zero, and it didn't matter. The market kept going up. So you got to take all this stuff with a grain of salt. But combined with the outside reversal day, it's a little bit of a caution flag. So the market probably does need to pull back here. So anyway, so now I gotta somehow fix my chart, and what I need to do here we go. I need to switch to like this next chart to figure out exactly how to set my screen. So there you go. I got a separate chart with the RSI on it and a bunch of other lines. So you can see what I'm talking about. Anyway, on to the next chart. So here we go. My screen is set back up. This is the weekly chart that basically gives sort of the bigger picture. This one I think I like better. Yeah. One of them is zoomed in, one of them zoomed out, but this weekly chart here basically has all the marks on it from sort of like way back. Yeah. In theory, this is where when I'm looking at anything nowadays and trying to figure out what the heck's going on, my go-to view is right here, because the end of 2019, the beginning of 2020, because I want to see where everything is in relation to the pandemic sell-off, right? And so, I mean, this is the perfect spot to measure, the inflation from too, right? Like if you're gonna compare, anything to anything, if you're gonna compare the price of apples to the price of oranges, what you want to do is you want to start right here, because this is where everything in the world changed, really. And it really did. I mean, the entire I don't even know what the word I'm looking for, but everything going forward from that point took like a big fork in the road, so to speak, because did they overreact to the pandemic? Um, I don't know. Did the Fed overreact to the pandemic by creating trillions of dollars out of thin air? Did the government overreact to the pandemic by saying that people didn't have to pay their mortgages? I mean, yeah, I can't even fathom, and all the crazy stuff. I mean, people still bring that stuff back up. There's so much crazy stuff. I remember, um, like they were arresting people for walking down the beach and on a public beach in California because we were in the middle of a pandemic and you weren't allowed to be outside. So anyway, the world changed back then, and that's where you want to compare inflation to. And so whatever you were paying, whatever you were paying at the end of 2019, the first couple of weeks of 2020, that's what you want to compare everything to, as far as how much inflation has there been. Well, and the reason I mentioned that is because I saw some video yesterday of some young guy walking around Costco, and he had taken pictures of the prices of stuff, I guess like a year ago or a couple years ago, and he was walking around saying, hey, they're pretending that inflation is 5% or whatever. And so, he's pointing out all these examples where the price had practically doubled, or, and that's Costco. And like where the prices were like up, 70%, 80% prices. I mean, just crazy. And so I don't really know, to be honest with you. I mean, there's certain things that I buy all the time that I know the price of, and I know that I can get a 2-liter Coke at Walmart is the cheapest place, and then there's a couple of other grocery stores, and there's Circle K and this and that, and so the price of everything varies so drastically from location to location these days that and so anyways, it's actually it's kind of hard to say what is inflation. I mean, you have to almost take something that's kind of standard. Um, and so it's very difficult. So, but on a positive note, I have noticed that the price of a lot of groceries, while it's gone up considerably, it's also sort of stabilized. I think a lot of prices, it's been a long time since they've raised the price of certain items that I buy. And so, the inertia of inflation increasing, and like, but here's the thing, there was a period of time there where for like a year or two, every time I went to the store, it seemed like they raised the prices had gone up from the last time. So you guys remember that. So, like I always say, if inflation was 0%, everything's still going to be a hell of a lot more expensive than it was a few years back. So, with that said, let's look at some stocks. Let's look at some charts here. Oh, geez, I'm on a weekly chart. Um, yeah, the funny thing is, I told you I was having a conversation with my neighbor. I told him the other day that all these people that are building these big giant houses on the beach now, these 3-story houses that are slowly taking away more and more of my ocean view, they probably, bought Nvidia back in the day. So there's your 10 bagger, right? The proverbial 10 bagger from 100 to 1,000 in just a couple of short years. So just a beautiful weekly chart. And so, there's a lot of people out there. You wonder why housing prices are up because there's a lot of people out there that have invested in, certain stocks for long periods of time, perhaps this one. And so if somebody had shares of this from back in the day, where's that $100 mark? Yeah, there it is. So, somebody who's holding shares of Nvidia, they made 10 times their money, and, now they're doing pretty good. So, and there's lots of other stocks like that, Microsoft. I remember years ago talking to one of our old customers from back in the day, because we've been doing this for 24 years now, and he said, yeah, I bought Microsoft back in, I was probably the 90s, and he said I can't sell it because I can't afford to pay the taxes on it. So he probably, I mean, think about that. And so he had been holding Microsoft for since the 90s, and that was a pretty good reason. He didn't want to sell it because he didn't want to have to pay the tax on the capital gain. And so he just held on to it through the ups and downs, thick and thin, and that type of thing. And so, you know, unfortunately, he was elderly at the last time I talked to him. So, his children are probably, you know, happy with his investment decision, and the fact that he held Microsoft since the 90s, would never sell it because he didn't want to pay the tax on it. So, speaking of which, some of you that have been watching the show for 10 years might remember somewhere back in here, me and Doug having some conversations about AMD when it was crossing from it was like $1 or $2. I don't remember which. So think about that. If anybody out there was listening to the show back in these days here when me and Doug were talking about, buying AMD because they were starting to put AMD processors. I mean, they were in lots of computers. I mean, for several generations of computers, I didn't care if it was an Intel or an AMD processor in there. I went for and so, I had lots of AMD computers. For all I know, one of the computers I'm driving now has got AMD in it instead of Intel. I don't really care. Hey, I'm more concerned about the RAM than I am the actual processor. But anyway, long story short, so, imagine buying this thing for $1 or a couple of dollars or even $5. And so, part of the reason that there's such the wealth disparity is the fact that, potentially some of the people that have invested in some of these high flying stocks are doing great. So, speaking of which, let's just say that, back during the dot-com bubble back in the 90s and all that into 2000, let's just say that semiconductors are always kind of the proxy for how's tech doing, right? And back in those days, I mean, they didn't hardly put semiconductors in cars like they do now, and we didn't have, the EVs. Although, quite frankly, back in the 1900s, there was lots of EVs on the market. You could buy electric vehicles. People act like it's new, but anyway, everything's semiconductors nowadays, and so the SMH is, and especially SOXL. I mean, if you're going to, and this is kind of interesting, because typically you would think if semiconductors are like driving, the economies of the world, in which they are, you'd think just 3 times semiconductors would be, in the stratosphere. But looking at this, I mean, if you catch the cycles, but see, there's inherent problems with these leveraged ETFs, right? Just look at that chart and then look at SMH. So, um, you know, in a few short years, semiconductors have gone, what's that, 5 times? That's 5 times. And so if you just pick a random, and I talked about this last week, I joked about Intel just being absolute garbage compared to all the rest of the semiconductors, right? And Intel's in the Dow. of all things. And this is just it's incredible to me that, Intel being in the Dow is like, probably you'd be hard pressed to find a semiconductor stock that looks this crappy after all these years. I mean, if you invested in Intel in 2017, right? Look at this thing. It spent almost all of 2017 around $30. And so, that's the problem with buy and hold. I just showed you a few charts where people, bought and held certain stocks and made, 5, 10 times their money and got extremely wealthy off of that. And then, boy, if you buy and hold the wrong stock, you're screwed because you go, you know, I mean, this is 26, 27 years, right? Am I right? No. 1, 2, 3, 4, 5, 6, 7. I'm giving me 7 years, not 27 years. What am I thinking of? Yeah, I was thinking back to, yeah. Here you go. How about this? So Intel's in the Dow, right? Imagine what the Dow would be if Nvidia was in it, right? Or Qualcomm or something like that. I mean, this is Intel going back to the. I could do this all day. I mean, because I was around for the. Qualcomm was one of the poster childs for the dot-com bubble when semiconductors just went absolutely parabolic, right? It went crazy. And so put that in context with where it is now. And so there's another one, 25 to 225. And so anyway, semiconductors have always been sort of, and I remember this from back in the 90s. Everybody kept an eye on the semiconductors because that was the proxy for the tech sector and all that. And so, long story short, you can never go wrong investing in semiconductors in a technology bull market cycle, right? And some of these individual stocks, absolutely insane. Go back and look at AMD on a super long-term chart like that. Yeah. And even back then, I mean, the 2000 bust, AMD was $50, and it had its ups and downs. But look at this. I mean, it spent 17 years doing nothing, and back over here, I mean, this thing was $1. It was the same price as a lottery ticket, if you think about that. And we used to talk about it on the show because it just had this bottoming pattern. Boy, I wish I could dig up one of those old shows. So, yeah, Doug and I used to do the show like, geez, we do that every morning? We might have. Or maybe it was just 3 days a week. I don't even remember. But we should do that, in the mornings back here and, this time. Because I remember distinctly, pulling up a chart of AMD and talking about the fact it was going, it was finally passing $2. Right? Because dollar stocks, a penny stock. You don't really fool with dollar stocks, but anyways, there's some beautiful. This is a study in technical analysis. Of course, this is a weekly chart, so I'm a little bit more of a fan of weekly charts these days. Speaking of which, let's look at ARK. I like to keep tabs on ARK. Yeah, the weekly chart doesn't look so hot. Let's go to my marked up daily chart and see what it looks like. Yep, there we go. So, I mean, hey, ARK is still in this huge, humongous consolidation. I don't even keep up with like their top holdings anymore. I don't know. I don't know if Tesla is still amongst their top holdings or Zoom or whatever. But I could easily look that up, and so could you. But anyway, yeah, I wanted to look at Tesla here because and I'm on a weekly chart too. Huh. Yeah, it's gonna be interesting. It's gonna be interesting to watch this play out. Tesla is actually another stock that that a lot of people made a fortune off of because ever since all these years back here, it was trading for next to nothing, right? And then you had this huge run, but there's also been tons of money lost in this too. I mean, you can see that, the people made, 5 times their money, and then some people lost, 25, 30%, and then there was others that, Even from right here, this is what I like to look at, and this is just something to consider and think about when it comes to like investing and buying and holding and that. So from here to here, you doubled your money. Some people doubled their money. From here to back down here, even here and back here. I mean, these are huge percentage swings, but you doubled your money and then you lost half your money, right? And then, some people held this from 400 to 100, in which case, I mean, it's got, clobbered. They got clobbered. I mean, if you hold if you hold a $400 stock down to $100, there's definitely some sleepless nights involved in that, if you ask me. And so, but lo and behold, some people, when it looked like the bottom was falling out, some people had the nerve to step up and buy this thing about 100, and then, they doubled their money, and if they didn't get greedy, they tripled their money, right? And so, and then, I mean, you talk about a ride. So, middle of last year, this thing was $300. Obviously, my time has expired because someone keeps calling me over and over. So, some people bought this thing for $300, and then lo and behold, they lost half their money again. So, I mean, these crazy swings, doubling your money, losing 50%, doubling, losing 50%, and all that is some crazy, crazy, crazy price action. So, but, quite frankly, I'm warming up to the idea that someday out in the future, in theory, this could potentially be one of those stocks that has another heyday, so to speak, right? So, anyways, I'm kind of warming up to that idea, and it's hard to. Speaking of beat up stocks, let's look at Boeing here. This is a mind blower. I mean, years ago, and I'm going to say, like I said, I started investing systems we actually started our companies in 1998, but I started investing systems, like I got that name in 2000, so it's been 24 years, right? So, to put it in perspective there. Back there is when we started investing systems. Anyway, somewhere back here, right, when the market was hitting all-time highs, or heck, it could have been back here. I don't even remember, but they had this special on CNBC. Maybe it was the Dow 20,000 special, right? By the way, the Dow's over 40,000 now, right around 40,000, but I have my Dow 20,000 hat. And so anyway, maybe it was when they were doing that special, but they said if you could go back in time and buy any one Dow stock, over the last, X amount of years, Boeing was the number one performing Dow stock at all 30 of them over like, a 20-year period of time or whatever. But Boeing was number one. And I remember thinking to myself, boy, if I ever invent a time machine, I'll go back in time and buy Boeing. And so here you are. Here we are, Boeing. 7 years later, they're having a lot of problems. This is a potential turnaround story someday. I guess. I don't know. I don't know. Maybe they should change their name. I mean, everybody else changes their name, right? Facebook changed their name to Meta. Google changed their name to Alphabet. Who's the other one? Oh, Twitter changed their name to X. So, and I'm probably forgetting some. So maybe Boeing should change their name too. The thing about Boeing is they are also part of the military-industrial complex, right? So I don't think they're going anywhere. But speaking of which, oh, hang on, that's the wrong one. ITA. Yeah, this is pretty amazing to me because, quite frankly, like the defense stocks, I don't know what's wrong with this ETF, but this doesn't impress me at all, right? This is a weekly chart of the, aerospace and defense ETF, and it looks like garbage. And like, even if you did, even if you bought it at the right spot, you hardly made any money. So this thing's garbage. I don't know why I even pulled it up. Like, this is the type of thing that you just avoid. Oh, real quick, I did see that ConocoPhillips is buying Marathon MRO. Let's look at a daily chart of MRO to see what kind of premium they're paying. Huh, interesting. What a good spot to do a buyout, right? Like, if they were going to buy him out up here, then it would have gone much higher. Huh, that's interesting. That's insidious almost. The fact that, it went from 30 and had that, that pullback, that it was actually kind of starting to set up, and then they announced the buyout. Anyway, I better run here. I'm going a little bit over my time, so lots of interesting stuff to talk about. Thanks for tuning in. I will see you back here, same time, same place next week.